Greetings. Welcome to my weekend market recap, 29th May 2022. I am restarting the live YouTube session. Once again, I had to terminate the session a while ago because of audio problem. I am restarting that again. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I developed. This is my email ID, tradingprofitably@gmail.com. I regularly share live stock and market analysis at my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagarnandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I may mention about options trading from time to time. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if option trading is suitable for you. I use the Q systems to make trading decisions. They run on Metastock platform, and one component, the technical analysis component, runs on TradeStation as well. That was the last slide. Let's continue with a look at the global systems, starting with Australian market index, all ordinaries. In the last webinar, we saw that all ordinaries was moving inside a range created by trendline support and resistance. That is still true. It is near the lower edge of the range rather than being near the upper edge. So if we at all take a trade, we may look for a bullish trade, but I will do that only if it can break out successfully out of this box range that is forming in the daily chart. It is moving sideways. And as I go through the global markets, you will see a change in relative performance between global markets and USA market this week. Last week, I showed that global markets were considerably outperforming the USA market as a whole. However, that has changed this week. This week, the USA market seems to be more bullish. Let's see if that is true. Australian market, in terms of all ordinaries, moving sideways. What about topics? Japanese market. Topics is also moving sideways, not inside a box like all ordinaries of Australia, but it is inside a triangle pattern again created by trendline support and resistance. We will not like to take a trade unless it can break out of this triangle pattern. Next, China CSI 300 index. In the previous roundup, I showed that it displayed the bullish headwind in weekly chart, and then it started to go up little bit. However, it has a trend line resistance now. Will not like to take any long trade unless it can break out of the trend line resistance. If it can break out of the memory trend line resistance in daily, then we'll be happy to take long trades because it will be creating higher high, higher low at that point. It will be breaking out of the trend line resistance, and because the weekly backdrop color has already turned bullish. No trade setup right now. We'll wait for the trend line resistance to be broken. India's Nifty 50. Nifty 50 recovered somewhat from the watermark support, that is here, and also from the watermark support in the weekly chart. It cleared one trend line resistance, but there is another trend line resistance very close by. I'll not like to buy unless that trend line resistance is also broken. If that is broken, the next resistance is far away. We'll have enough pathway to take profitable swing trades. For now, I will wait. And UK's FTSE index, that was inside a triangle pattern, ascending triangle in weekly, and that is still holding. It is still inside that range. So overall, we saw all the global markets are in a range more or less. And if we look at the global index as a whole, the custom global index, it is also inside a triangle pattern, and on Friday it closed just below the trendline resistance with a candle that has both upper as well as lower tails. And in this area you can see the relative performance line was tilting up. However, this week it tilted down. We'll see what happens next week. This is what I mentioned earlier, that though earlier the global market as a whole was outperforming the USA market, this week it has underperformed, and it is inside a triangle pattern as a whole, couldn't successfully break out of that. Now let's look at the USA market, starting with QQQ. I will highlight a few things. Firstly, the bullish headwinds. In weekly, now we have a bullish headwind, possible reversal signal, that came after this sharp drop. It came right at the bottom, the first bullish candle at the bottom, and the backdrop color flipped to bullish color. It did not go through the yellow color from magenta. Magenta, it directly turned cyan. So that was in a way a bullish reversal in terms of backdrop color, and that was accompanied by a bullish headwind. It also displayed a bull release signal. We cannot see the bull release signal on the candle because the headwind signal is overlapping that, but we can see the bull release signal from the band indicators. So we have multiple reversal indicators in the weekly chart. In the daily, we had the bullish headwind earlier. I showed that in the previous roundup also. Then it created a false downside breakout, displayed two bullish indecision at the bottom, and now it has created a higher high. So we have a higher high, however we still have a lower low. So the direction is not decisive yet in QQQ. It had a very nice recovery from the bottom that coincided, or that was somewhat predicted, you may say, by the bullish headwind in daily and the false downside breakout. It has recovered after that. However, we still don't have higher high, higher low. Another thing that I tweeted earlier, I think Friday or Saturday after the market close, is that, or maybe just before market close on Friday, that market has already gone up for a few days. If we look at this ETF, QQQ, if we bought at the close of Friday, where will be would be our stop? The logical stop would be below recent low. That would be too much risk for a swing trade. So this is what I mentioned in a tweet on Friday, I think before market close that though Friday was very bullish, it was probably a bit too late to take long trades. And I made that comment not looking at individual stocks but looking at the market ETFs. And I am explaining that comment now once again is because my stop when looking at QQQ would have been far away. I would not like to risk so much for a swing trade. And that same thing will be true for other market ETFs, and only one ETF will have some difference. Let's look at it. Let's look at SPY. Once again, we had a bullish headwind in daily and a false downside breakout and two bullish indecision at the bottom. After that, price has gone up. We have higher high, but we still have lower low. Direction is not clear. In weekly, we have a bull release signal and the color flipped to cyan from magenta. We also have a very bullish momentum signal in weekly, not even in daily, in weekly, that is bull move up 3, very bullish momentum in weekly. So all these are pointing to a possible up move from here. Only reason I am reluctant to take a long trade right now in SPY also is because my stop would be too far for a swing trade. I would rather wait for a pullback creating a higher low and then for price to go up again. DIA, here also we have a bull release signal. The backdrop color in weekly flipped from magenta to green. We have big move up 3 in weekly, very bullish momentum. In daily, it created a false downside breakout and price has gone up significantly. I'm saying significantly when I'm talking about swing trades, and the stop would be too far to take a long trade at the close on Friday. Here also we have higher high but lower low, so the direction is not clear. In that way, in terms of higher high, lower low, all these three market ETFs are similar. However, IWM, the small cap ETF, is different. This is IWM. This is the only market ETF that has higher low and higher high. So the direction is clearly in uptrend. We also have a bullish headwind in weekly, to bullish indecision at the bottom, and backdrop color flip to green from magenta without going through yellow. So when I look at the four market ETFs, IWM is looking most bullish in some ways, like the higher high and higher low. However, it also has a trendline resistance nearby, and for IWM also, if I bought at the close on Friday, my stop would be somewhere here. That is too much risk for a swing trade. Price has already gone up significantly for 3 days in a row. So stop would be far away, and that's what I commented in a tweet on Friday, that it may be too late. That was looking at the market ETFs. Market is looking bullish. However, it may be a bit too late to take long trades. Waiting for a pullback may be wiser. Individually, we may find trading opportunities in stocks, in strong industries. We'll have a look at that. But before that, I will show many more bullish indications. And this will also be a good point to remember what I shared in the last market recap. I showed that the market was oversold from many angles and that the market was ready to go up. However, all the market ETFs had in the daily chart trendline resistances. And now you can see those trendline resistances are broken. If we want to see the broken trendline resistances, we can use QElite running on TradeStation that can show the historical trend line. So IWM, this is IWM daily chart. The trend line resistance was broken on Wednesday. So if you followed what I described in the previous market recap, when would you buy IWM? That would be on Wednesday. And when IWM broke out of the triangle pattern, many small caps would have given very attractive low risk buying opportunity. On Wednesday, the stop would be very narrow. And if we bought at that time, following Q guidelines, then by Friday's close, we already covered more than the risk distance and we could book at least partial profit. And then there is no problem, no harm in holding partial position because the market is looking bullish now. So Wednesday would be the perfect day to buy small cap stocks. And the other market ETFs also had trendline resistances. Those are also broken now. Let's quickly look at those trendline resistances and when they were broken. For SPY also, this is SPY. The trendline resistance was broken on the same day, Wednesday. QQQ. QQQ, that resistance was decisively broken not on Wednesday but Thursday. And for DIA, it was broken on Wednesday. So on Wednesday, 3 of the 4 market ETFs broke the trendline resistance. And that is exactly what I mentioned in the previous market recap, that we would be ready to buy if those resistances were broken, and they were broken on Wednesday, and we already covered more than risk distance in all these 3 market ETFs, DIA, IWM, SPY. That is how precisely we could buy and we can buy in future also. The other thing that I tweeted was based on the sector industry stock advanced decline breadth. In the previous webinar, I showed that these colors were mostly red, and I remember I very explicitly mentioned that if the real time, that is the leftmost column, or after market close the daily column, the the second column, if they turn green, because we had a very oversold situation, we would be ready to buy. And if you check this real-time signal using QH, you would also be willing to buy on Wednesday. So the trend line breakout happened at the same time that the sector advanced decline, industry advanced decline, and stock advanced decline turned bullish to give us additional confidence to buy. Another thing that I mentioned in the previous recap was the percentage of bullish headwind in the weekly interval, and this is a snapshot from the previous market recap. I mentioned that though on the technical charts of the market ETFs we didn't have bullish momentum, the percentage of bullish headwinds in the weekly chart being more than the threshold of 1%, we could get ready to buy, and that once again came handy. With all these signals being known to us beforehand, we would confidently buy on Wednesday. We wouldn't wait till Friday. Many other people are starting to become more bullish now, but we would be ready based on what we saw earlier, oversold situation, and with enough bullish headwinds, we would get ready and we would buy on Wednesday. How is the bullish headwind now? Is it telling market will go up further? Probably yes. Let's look at Q Finder technical breadth. The balance between bulls and bears, weekly interval first. See the percentage of bullish headwinds. It has gone up even more. Last week it was 1 point something percentage above the 1% threshold, and now it is 5.8%. So this is giving me enough reason to anticipate market going up further. Though the market ETFs are not at a low risk point, so I may not buy any of the market ETFs now, but the bullish headwind percentage in itself in the weekly interval is giving me enough reason to think that maybe after a pullback, or may not be after a pullback, maybe straight from here, market will go up further. Also, the overall signals in weekly interval extremely bullish. Strength extremely bullish, trend continuation signals and reversals. Everything is almost 100%. If the market was not so oversold as it was at the end of the previous week, I will now look at these percentages and think it is too late to buy, because these are extremely high percentages all across the board. However, we were in a very oversold situation. That's why I am not thinking that market is overbought so quickly. And also again, once again, the bullish headwind percentage in weekly interval is also giving me more reason to think that market will go up further. If I look at Friday's signal, that is also bullish all across the board. Now, another thing that I look at to decide if technically market is getting overbought or not is the percentage of bullish signals coming from which price level. Is it coming from price extreme high, low or middle? When most of those signals as it is now is coming from price extreme middle or pendulum middle, sometimes we call it pendulum middle or price extreme middle, when it is in the yellow zone, then we know it is not oversold. So we have large percentage of signals bullish in both daily and weekly, but that still has not made the technical breadth overbought because we were in an extremely oversold condition. That is my conclusion looking at the weekly, daily technical breadth snapshots, and it is remaining very bullish. Now let's go to Q edge and look at the bucket analysis to see if it is getting overbought there. The bucket analysis, that is the distribution of the S&P 1500 stocks across their Bollinger Bands, becomes overbought when the percentage of stocks in the uppermost bucket greater than 10 bucket, which means the percentage of stocks above their upper Bollinger Bands, when that percentage goes to 30 or 40%. So from that angle it is not overbought. It has long way to go. Currently it is only at 17.7%. That's another reason I am not thinking market will stop going up. But here we have another signal from the same bucket analysis, probably unique to Q systems, that is telling me it may be a bit too late to buy right now. Maybe better to wait for a pullback. That is the jump in percentage of stocks in the uppermost bucket. That jumped from 1.3% to 17.7% in one day. That's a gain of more than 16%. And my observation is that whenever this jump becomes more than 10% in one day, around 10% or more than 10% in one day, then market has gone up too fast. May not be too far, but market has gone up too fast and it may need to at least pause a while, if not pull back a bit, to gain its momentum again, to catch its breath, and then it may go up again. So my conclusion from bucket analysis is that it is not overbought, but it may need to take a rest before it goes up again. So this analysis from the technical breadth and the way the market ETFs are showing up in the daily chart, all are telling me that it is going to go up more, but I may wait for market to either pause or for a pullback. Now again, that is from the market analysis. We'll look at individual industries and stocks, but before that, let's look at the extremely powerful market breadth total view and see if that could also help us to buy on Wednesday when all the market ETFs broke out. In the last market roundup, I mentioned one thing very explicitly. That was looking at the Phoenix signal and probably even more than that, the distribution count of 6 that came after the market already dropped a lot and when the 3-month new high-low index was at the lower extreme. When the Phoenix comes at a higher point, like this point, then we would be confidently starting to short. But when Phoenix and the 6 distribution count comes after market has already dropped, and there are other oversold signals here also in terms of 3-month new high low, and combined with that the fact that we had number of eurekas earlier, so market tried to go up, then probably tried to shake out weak hands through this Phoenix and 6 distribution count. This is what I described in the previous market recap last weekend, and see what happened after that. Another Phoenix but with a bullish shape candle. Immediately after that we had accumulation count of 1. One count is not significant enough to buy, so we wouldn't buy based on Wednesday signal. On Thursday and Friday we had Eureka days again, plus we had large accumulation counts. So if we used the Eureka and the accumulation count, we would be ready to buy on Thursday. If we use the technical charts of the market ETFs as breakout trades, we would be buying on Wednesday itself. Now let's look at few other signals here that I highlighted in the previous market recap. That was new high, new low percentage. I showed in the previous recap that was already showing a bullish divergence, and I mentioned that a bullish divergence in advanced decline and up down volume may soon follow. Now we have very clear bullish divergence in all three of them, and I'm not changing to the weekly. Why not I change it? Change it to weekly interval, and you will see we had very deep lower low in the market breadth total view candle chart, and we didn't have any low at all at the lower edge. So we had very strong bullish divergence in the weekly interval for market breadth total view, and that is the interval that I suggest using for advanced decline up down volume. For new high new low you may use the daily interval that already showed the bullish divergence earlier, and the weekly is also showing bullish divergence now. So using previous week's market recap, we could anticipate this divergence coming and get ready to buy, and we could actually buy on Wednesday itself in some stocks, some market ETFs, and Thursday in more stocks. That is my view from the market level. Now let's see if we can still have some low risk buying opportunities. Let's try to do a top down analysis. Let's look at the strongest sectors first, though I will actually drill down from the strongest industries, not from sectors, because sectors sometimes hide the strengths and weaknesses of individual industries. But still, let's have a look at the sectors to see what is in favor this week. This is a sector heat map scorecard. On Friday, information technology and healthcare are strongest. Which ones are the weakest? Consumer staples, utilities. What does it show? It shows that the defensive sectors are weakest and the non-defensive ones, many growth stocks in infotech and healthcare, they are the strongest on Friday. Could we buy before Friday? Yes, infotech was already strong one day earlier also. And though healthcare, when you look at the score, you don't see the strength, but we could use the acceleration to buy on Thursday or probably on Wednesday also, because the market ETFs broke out of trendline resistances. I'm sure several infotech healthcare stocks also broke out on Wednesday. Currently, if I am going to buy, I will focus on infotech healthcare. I'll avoid consumer staples and utilities. Having said that, let's go to the industry level. I want to look at the top 20% strongest industries. These are the strongest industries. Let's see which sectors they are in. I'm sorting by sector, eliminating the other industries. They are in communication services, many in consumer discretionary, several in healthcare, and also many in information technology, also materials. Some are in defensive sectors also, real estate, consumer staples. So let me focus on the non-defensive sectors here. So com services, consumer discretionary, let me avoid energy that may swing suddenly based on news coming from Ukraine. I choose financial, all the healthcare, industrials, infotech, materials. So I'm choosing the sectors that are non-defensive, excluding energy, and focusing on the industries that are among the top 20% industries on Friday. And let me drill down for now to S&P 1500 stocks. These are the stocks. If I sort by Friday's percentage, you can see many of them went up by very large percentage. In Q Technique, I would like to align all forces. So I already looked at non-defensive sectors, strongest industries. Now I would like to buy either value or growth. But I saw that the strongest sectors were infotech and healthcare. Those have many growth stocks. So instead of looking for value or growth, let me look for growth stocks only. High growth stock in the last quarter, I have these stocks, and still I see among the high growth stocks, many stocks went up by large percentage. Let me choose all the stocks that went up by at least 2%, and then see using Q Finder if any of these stocks gave a proper Q trade setup. These are the stocks. If I click the setup alert, then I see that these stocks, I am left with 22 stocks. You can see the summary count here. These 22 stocks have one or more actual Q buy setups. So what are we looking at now? We are looking at stocks that have at least one or more Q technical trade setup on Friday, and these stocks are all having high growth in the last quarter. They are in the top 20% industries on Friday, and they are in non-defensive sectors. So I'm aligning all the forces. Market is already bullish. Now I see that a large number of them are breakouts, and only two of them are breakout with bullish pressure. So I could look at all of them, but let me focus on the breakouts only. So I am going to look at the breakouts. I am left with 21 stocks. Instead of immediately looking at the technical charts, let's look at the momentum signals. that is the AGSI like signals, to see if any of them are in a squeeze. Yes, several of them are in a squeeze. And do they have MOBO breakout with a Kahuna? We have two such stocks, these two. Let me close the existing charts if I have any. Nothing. Great. Come back. So I have two stocks. Actually, they happen to be very well known, Autodesk and Moderna. They both have MOBO breakout from a squeeze with Kahuna. Autodesk also has viable gap up, PSAR reversal, and the Q big move up, bullish momentum. Moderna has, other than MOBO breakout squeeze Kahuna, a pocket pivot and a Q big move up momentum signal. Moderna is at jump and thrust, not jump, thrust low. No such oversold situation in Autodesk. So these two are breakout candidates with many bullish momentum signals. Let's look at these two stocks first. I'm not sure if we'll find a low risk buying opportunity. That's what we are finding out in real time. Open the two stocks, Moderna and Autodesk. Autodesk is looking great. Isn't it beautiful? The steps that I described, how easily I am able to implement a very powerful technique, that is a top-down analysis, combining so many forces, so many dimensions together. And one look at Autodesk says it's looking beautiful. And let me read out. Bullish headwind at a low price level that created an watermark level. Try to test that level 3 more times. Another bullish headwind. Never went down much. The two bullish headwinds pretty much caught the very bottom. And then it had trendline resistances, two of them. Here we wouldn't buy before those resistances were broken. On Friday, that was broken very decisively with a gap up open. So we could buy right near the market open using the gap long trade setup and also as a breakout long trade setup. You can see big move up 3 here and just coming out of price extreme low. This I have mentioned many times earlier and in master classes also, that whenever we have big move up 3 bullish momentum at price extreme low, after hitting jump thrust low, more often than not it will continue to go up further. So looking at daily only, Autodesk is giving a buy setup now, but I like to look at it using weekly, daily to see if we have further reasons to buy now, or if we have some reason in weekly not to buy. Let's look at weekly, daily at a glance. Well, we have further reason to buy now. Weekly also had a bullish headwind signal, came very close to this very long term trend line support, went up from near that trend line support, and also it created a false downside breakout at this watermark level. The weekly also had a bullish reversal with very high volume after hitting jump thrust low. So those are pointing to very bullish momentum after an oversold condition. So daily, weekly both are allowing us to buy. That was Autodesk. Let's look at its fundamentals. We already know it's a high growth stock, but I would like to look at the complete scorecard of the stock using Q Vital fundamental scorecard. Fantastic, isn't it? I started by looking at only growth stocks, but now I see it is not only growth stock, it's a three-star candidate. It's a high growth stock and it is undervalued. So that's a three-star candidate. 1 plus 1 in this case becomes 3, not 2, because it's more powerful than just being value and growth combined together. These are very strong stocks, robust earnings quality. On Friday went up by 10%, steadily going up for last several periods. Earnings per share is positive, the company makes money. This is probably a perfect example of how we find stocks in real time. The industry itself was very strong on Friday, 93% of peer stocks went up. And if we look at the industry scorecard again, we know it is among the top 20%, but let's focus on only this industry, application software. It was very weak earlier. In fact, it was among the bottom 20% of industries, then rapidly gained strength that showed up as acceleration in the pace column, and on Friday it was among the top 20% industries. So we found a true 360 degrees buying candidate as of Friday also. That's what I mentioned, that though market ETFs are a bit too high to take a new long swing trade right now, individual stocks may give buy setups on Friday, not only technically but using the 360 degrees analysis, and we found one stock in this live session. There are probably many other stocks. I leave them to your good hands to carry out the same 360 degrees analysis. Could be done in top down approach that I demonstrated just now. It could be done in bottom up fundamental first approaches as well. In summary, market is bullish. There are many signals, whether it is bullish headwinds in weekly interval or the yellow region from where the bullish daily technical setups are coming, that are telling that market has more ways to go up further. Bucket analysis is also not showing overbought condition yet, because the market ETFs are a bit high from the recent lows. You may be cautious about buying stocks, but there are certainly buying opportunities right now, just like Autodesk. Let me end today's session here. Thanks a lot for attending. I look forward to seeing you in my next market recap that will be next weekend. Have a great weekend, and as this live analysis show, there is no reason not to do that. Trade profitably. Thank you.